I'd like to invite our panelists to come up onto stage. Peter Levesque, and we have Justin O'Brien, Gloria Liu, and also Alicia Garcia. Please come up and have a seat with me. Well, thanks so much. Okay, I'm wearing red today, not out of any particular political affiliation, just to remind anybody, in case they forgot what happened today, that Trump will become president of the United States and the Senate will be Republican. So that's a little bit of food for thought as we get into a discussion about what this means in specific industries and what it means for Asia. We have 4 experts on stage from different areas, different industries, very much based around Asia. I'd like to introduce Alicia Garcia Herrera. She is the chief economist with Natixis. She's been in the Asia region for 11 years via Europe and very globally sensitive to what's going on in the world in terms of trading. Justin O'Brien is a specialist in financial regulation, a professor now headed back to Monash University in Australia. Gloria Liu is with DLA Piper. She is a specialist in China, cross-border M&A and legal issues. And Peter Levesque is COO of Modern Terminals shipping business. He's been here for many years. Modern Terminals is owned by Wharf shipping business, been here since 1972. So wow, a lot of things to think about. And I'd like to start with you, Peter, on the subject of trade. That has been a big issue in the America First view that Trump has had. And one thing that a French ambassador to the United States said in the media today when the results came out was, "The world is crashing before our very eyes." Does it feel like that to you today when you think of the shipping business and trade?
Well, first, a friend of mine called from the U.S. after the election, and he said that there's a line a mile long to get in to see Elon Musk right now, because and these people are all volunteering to go to Mars for some apparent reason. And Tara, just to be clear, I haven't been here since 1972. Modern Terminals has been here since 1972. Trade is just a huge issue for us, and I think Pete mentioned that trade has been steadily declining now for quite some time. We see that at Modern Terminals in terms of ocean shipping. And from an American perspective, working for a shipping company or a container terminal in Hong Kong, it's a little unnerving because, as an expat out here for a long time, my feeling is that if the United States wants to continue to be a leader in the world, you need to engage in the world. And we do that through trade. And we do that through having people come out and study and work and live overseas. So trade is a big factor. And when you look at what's happened with TPP, and we've done a lot of advocacy work around TPP over the years, and TPA, we finally got that passed after two votes last year. So we got the Trade Promotion Authority in that sent a message out to the other 11 countries that we want to do this deal. And now we sit here, and these 11 countries, I'm sure, are looking at us like, what is going on? So it's very frustrating, and for the U.S. to begin to look inward, if that impacts trade, which it probably will, we can be sure that any void created because of that, China will pick that void up. And that's something that I don't think that the U.S. really is necessarily good for the U.S.
Trade deals don't get put together quickly, and they probably don't come apart that quickly, though they might come apart more quickly than they get put together. So how do you position yourself in the meantime in terms of your business and thinking about how it might all unravel?
Well, the approach that we've taken over the last couple of years is that instead of planning for next year to be better, we've just kind of accepted the reality that this is a new normal, that this is just going to be really how it is. So we're restructuring our business to be able to compete in a very low growth, low rate type of environment, and that's really all you can do. So that's been our focus over the last couple of years.
And you mentioned China. Is that a key area where you have to maybe say, I'm going to look at moving my business elsewhere? Or do you think that you can continue the momentum that you've continued for the past few years while you see how things unfold?
Well, for the shipping business, China is always going to be relevant. We don't really have to look elsewhere. China is a big enough market. It'll continue to manufacture. It'll continue to be a major shipping point to and from. But we do look at other emerging markets, and what's happened now is that we probably will be a little bit more aggressive in where we look.
Okay, we'll come back to trade in a few moments, but Gloria, I want to move on to you. What risks are you really looking at short-term right now in terms of your business, cross-border M&A? Will it take a while for people to digest this and change the way they're doing deals?
Yeah, thanks. Following up on the trade source, actually it takes a long time for a country to enter into a trade deal or withdraw from a trade deal. So I try to take a very technical view of things after the results become available. And I think in the short term, we probably don't have to worry about the US leaving WTO. It has to go through the Congress. It cannot be done by executive orders alone. But some things can be approved by executive orders alone. For example, Trump has campaigned on a platform of raising tariff on imported goods, and he's proposed to raise tariff by 15 to 40%, depending on what it is. And that can be done by executive order. So if he comes into office and really does that, that makes foreign goods less competitive on the US market. And then from an investment point, investment in China, foreign direct investment in China has been declining already. Now you add that layer on top, I think there would be a significant drop on inbound China investment because you simply would not need so many factories to build so many goods to sell to the US. Now, in recent years, the trend seems to be for Chinese businesses to try to diversify their yuan assets and invest overseas, and we call it outbound investment from China. US so far is by far the #1 target for Chinese businesses doing outbound activities. And now with a not even strictly economic view, but also a generally anti-China or anti-immigration environment in US, it's doubtful whether the Chinese businesses will still make US their first choice when they do an outbound M&A. At least there would be a period of wait and see to see what the new administration would be like and how they would treat foreign investors. There are very small things the administration can do to make Chinese investment in US much more difficult. They can make the security review harder. They can have some more red tapes for you to cross. Some clients are already having trouble in US being reviewed for various acquisitions they did in the past year. So with the new administration, if you make it more cumbersome, then I believe a lot of Chinese businesses can say, I don't want to deal with this. I can go to.
Now, we have a few months until a new administration comes in.
Until
so
January
how do you
20th.
think Chinese businesses are going to react? Are we going to have a wait and see period? Are people going to continue to test the waters? What's your sense of how the next few months will go?
The calls and emails I got today pretty much say
Panic?
Okay, leaving out the panic ones, it's wait and see.
Okay, interesting times ahead, I'm sure, for your business. Lots of emails coming in. Justin O'Brien, deregulation, yet another huge topic. Trump seems like he would be a president of deregulating things. It's a new paradigm. How would you go about things?
Well, it seems to me that in many ways the one group that was quite prescient was the Nobel Prize Committee, giving the Nobel Prize to Bob Dylan, because the times they are a-changing. And indeed, one does not need to be a weatherman to know which way the wind blows. This is not actually a surprise. So let me bring you back to a previous winner of the Nobel Prize, going back to 1923. And this was W.B. Yeats. And he wrote a very significant poem called The Second Coming. I'd like you to think about this as we discuss this over the course of the next 40 minutes or thereabouts. But what he talked about in that poem is that turning and turning in the widening gyre, the falcon cannot hear the falconer. Things fall apart. the center cannot hold. Mere anarchy is loosed upon the world. The blood-dimmed tide is rising, and everywhere the ceremony of innocence is drowned. The best lack all conviction, and the worst are full of passionate intensity. In many ways, that sums up what actually happened in the US election today.
I thought I was in shock.
But I hasten to add, not necessarily just in relation to some working class Republican angst. This is an angst that basically transcends the Republican Party. It actually features directly within the Democratic Party, and it speaks directly to what we've been speaking about over the last couple of days, about a process of what David termed reverse globalization, about the concerns of technological change and the impact that that has on employment. Because the people who are impacted by deindustrialization in contemporary America are not necessarily people from just the Rust Belt and blue-collar workers. These are lawyers who are losing their jobs to Bangalore. There is a real sense of anger and frustration. And what's happening in the United States demonstrates in many ways how America is connected to the world rather than American exceptionalism, because this follows directly on Brexit. So this is Brexit plus plus. Welcome to the new reality.
Okay, so it's a new paradigm. One that we're all trying to digest and figure out, even though we had Brexit a few months ago. Just before this event, we were looking at the VIX, and you were showing me how in the financial crisis, it was much higher than it actually has been over the past few days and the past few weeks as anxiety built about the US election. What's this going to mean, though, in terms of regulation? Because it was that financial crisis that really brought all of those regulations into force.
Yes, it's almost back to the future, isn't it? You know, so if you go back to the beginning of the financial crisis and across the world, when you had all of the investigations into the root causes of that crisis, there was a recognition that basically, ultimately, this was a normative crisis. This was a crisis of values. This was a crisis of culture. We then moved towards basically technocratic solutions. But technocratic solutions cannot solve normative problems. We lost sight of that. But what I think is now happening is that there is now a growing recognition, not only in the United Kingdom, but also in the United States, that that has to be actually dealt with. And I think, in a way, that gives a window of opportunity for industry. This is an opportunity for industry to demonstrate its good faith, because industry is no longer going to have the implicit too big to fail subsidy. It's not there anymore. It's not there politically, and arguably it's not there financially. So this is a window of opportunity for industry to demonstrate that in actual fact it recognizes its commitment to society. The interesting thing is that the international paradigm in many ways has been created by a combination of the United Kingdom and the United States. Both are now looking inwards. So this offers an opportunity for other parts of the world to demonstrate leadership and to demonstrate ultimately that the finance industry is in actual fact subservient to society. And this is what Mark Carney at the Financial Stability Board has been talking about increasingly over the past number of years, that industry has to recognize it has a social license to operate. If it doesn't recognize that, there are going to be political consequences.
I get a sense that you're telling me this is Australia's moment.
It's possibly, well, it all depends on how the bank bill swap rate litigation actually ends up shaping out in Australia in the next couple of months. But I do think that there is an opportunity for Australia, precisely because Australia has been heavily involved in the leadership of IOSCO and senior positions within Basel and senior positions within the FSB. It's also, in many ways, Canada's moment, right? Because you have Justin Trudeau, basically, who has no experience, but at the same time has a degree of empathy. But the Canadians are very sensible, right, in terms of recognizing that the industry actually has to work within restraint. I remember going back to 2006 and being in London at the peak of the private equity bubble. And I remember speaking to a very senior person from Fidelity who said to me, listen, this crisis that's on its way is going to be a disaster. All of the restraints have disappeared. greed will destroy this industry. And greed did destroy it. In many ways, we had an opportunity in the immediate aftermath of 2008. We didn't use it. The talk process wasn't used in the United States. Equally, if you look at a bank like RBS in the United Kingdom, brought into state ownership, and ultimately at the same time, they still managed to manipulate LIBOR, and then after that, they manipulated FX. And we were told, well, you have to differentiate between moral bankers and amoral traders. Well, quite frankly, that's no longer good enough.
Alicia, Justin mentioned,
I am
amongst
going to
many other
comment.
things, opportunity. And a lot of people are saying the world economic order is about to shift dramatically. Is there opportunity in that? Do you actually agree that we're in for a big shift, first of all?
I think we are in a big shift, and as everything in life, it's not really about whether we all lose. It's about who loses the most. So, you know, in the footballistic, like, you know, I'm from Spain, so it's impossible to talk about football, even if I don't like football. But it's like something of the order of -5 US and maybe -1 China. I mean, what I'm trying to say is that, yes, of course, this is bad for everybody. Trade won't recover. But the reality is, who is going to make the most out of it? And I think China will. That's the way I see it. And there's a number of, I just want to focus on two reasons, two very simple reasons. Of course, barring the unlikely, I don't dare even say unlikely anymore, because, you know, it looks like everything I say unlikely becomes very likely. So say, barring the unlikely event of a war, which we can't any longer dispel.
Don't say it.
Yes, that's right. I think, you know, barring that event, China is the winner of these elections. And there's two simple reasons. Yes, trade, let's say that, frankly, I think there will be tariffs, import tariffs on Chinese exports to the US. But China today is exporting around 35% of its export capacity. Well, not its capacity, only what it exports, because it has much more there to export somewhere else to the universe. So Asia is about half of that. So if we don't have any Trans-Pacific Partnership, I guess we have no doubt that this is probably out of you know, the force. I think in the foreseeable future, I can't think of TPP being approved whatsoever or ratified. This will mean that China can move with RCEP much faster, if not bilateral agreements within the region. And think about countries like Mexico. Say there is no NAFTA anymore. I mean, that country has to look somewhere. Yeah, it's already suffering massively from what's happening. It's like the worst proxy of the proxy of Trump out there. And this is just really the ultimate country that was still looking northward. So northwest. I mean, the rest is already within China's. You know, if you want soft power, so if you think about Venezuela, if you think about Bolivia, Ecuador, even Argentina to a large extent. I mean, if you think about all of that, that used to be the US backyard. So you are increasingly like losing your backyard, you know, and China is building a much bigger backyard. And with Trump's victory, I think you basically leave the floor open for that to happen, because as you close down, people will move on. I mean, that's a basic principle of, you know, of military tactics. So we don't need to get to a war to see those military tactics applied to trade and trade deals. So that's one reason. Second reason is this interesting issue that among the many things that Trump said, there was a little point, in the ocean, which was little drop in the ocean. I don't like this Janet Yellen. I mean, sorry. She's helping Barack Obama, let alone Janet Yellen to, Hillary to win the elections by keeping rates low. So I was thinking, does this mean that he will be pushier? No, on monetary policy. I think he will actually say, now that I'm on board, let's keep it as it was, you know? So I actually think that this is going to put downward pressure on on monetary policy, on rates in the US, on the dollar, and thus all of those capital inflows that we were expecting into the US might not happen. And capital inflows is a net concept, meaning there will be outflows from residents. And on top of that, if rates keep low, there won't be the expected inflows from non-residents. So this means, going back to China, that China's biggest problem today, which is capital outflows, will become less of a problem because this is, again, a relative concept. When you have an outflow, you have to go somewhere. Where are the opportunities? You have, Japan, Europe, all with negative rates. Why the hell would you go there? The US, which was kind of the center of the universe in the expectation of a Fed, hiking, which may still happen, but it's not so much about the next hike. It's about how many more hikes will there be. And if you think about maybe say he doesn't dare, find a big reason for Yellen to go, but it's 2018. So as an investor, you can already think that, in the foreseeable future, 2 years down the road, there will be lower rates in the US than expected.
I'm an investor. I'm looking at this very complicated dashboard, trying to figure it all out. What do I do in the meantime? Do I go risk off, quite basic? Or where do you think I should look at putting my money in the short term?
So I guess we're too late to find say heavens, like gold or Bitcoin. That's a narrow venue, let me tell you. So barring those narrow venues, I think what I thought was a bubble, all of this fixed income market with crazy rates, that might not be a bubble, because you are expecting much laxer monetary policy in the US, according to what I just said, longer, because I don't think Trump is going to do what he thought was not fair, it's going to be very fair for him to keep those rates low and basically be helped by, if anything, that, There may be not much more there, trade won't help him, so he needs that. And thus, I think fixed income is safer than it was, that it would have been had Hillary won the elections, to make a long story short.
Some of the things I'm picking up so far, China, from what I'm hearing from everyone, looks like a big winner so far today.
Relative winner,
Rates are likely to remain low, in your view. We're not going to see any big move up in the short term. Trade, a big question mark that's going to start to unravel in a few months, but slowly, and Chinese investors starting to question where they might be moving their money. Peter, I just want to go to the question of America first. That's what American voters went to the polls and voted for today. Is there some good in that in terms of multinational businesses, or is it all a very worrisome trend? I mean, that's what Americans want.
Well, first, with all the doom and gloom talk on trade, if anybody has a job opening, I'd like to talk to you afterwards. There are positives, and I'll tell you two things that I agree with Trump on that I think will help. The first is we're in an anemic growth type of a global economy. And I believe that if you do cut corporate tax rates and you do provide incentives to repatriate funds back to the US, you're doing the right things to try to incentivize growth, versus what Secretary Clinton would have done, which I didn't agree with in terms of spurring growth. The second thing is, if he does what he says he's going to do around US infrastructure, I think that is, from a national security standpoint and from a global competitiveness standpoint, that would be the number one thing that he could do over the next 4 years. I don't know how many of you visit the States, but we have actual nets that are underneath a lot of our bridges that catch pieces of falling bridge from hitting the road underneath. I mean, the infrastructure is really in bad shape. And it's not only a competitive disadvantage, but in many ways, it's a national security issue. So that kind of focus and that kind of project-based type of investment creates jobs. That's also a lot to do with growth. So those are the two kind of bright spots that I see, and I hope they both happen.
So you're suggesting that we could have a stronger American economy in the next few years as a result?
I hope so. Yeah, I mean, there's so many things that have to I'm trying to be positive here, Tom.
Okay, I applaud that. Gloria, I want to get back to your point about Chinese investors. I mean, one huge trend that we've been seeing over the last couple of years is Chinese investors getting their money out, pouring it into the United States, into European companies. Will that trend reverse if China wins? As we've been hearing from Alicia, what Chinese investors now say, actually, I'll keep my money at home. Why would I want to put it in the United States? Why build skyscrapers in LA when I could build them in Beijing?
A lot depends on currency, right? So the yuan has been weakening over the past few months, over longer than the past few months. But now someone just came into office, and one of his mandates is to punish the people who are manipulating their currency. They think China made yuan too cheap artificially. So if there's any success in forcing China to make yuan stronger, then maybe the rich people of China don't really need to flee China in such a hurry, and they can keep yuan at home and do something with it. But nobody has a crystal ball here, which is very true this year. So I don't know which direction yuan is going to go. And that would have probably the strongest correlation to how much appetite Chinese investors will really have in outbound investments.
Do you think Chinese investors, Chinese government are already going, what are we going to do in this new paradigm? Or do you think they're going to wait, cautious, wait and see for at least a few months before moving money around?
In a sense, well, there is the Chinese government, the state-owned enterprises who usually do the big-ticket purchases. But there's also private enterprises, which are very large now, and they're doing a lot of acquisitions. So part of it is the state or the SOE thinking, I'm going to wait and see, is the Trump administration going to be friendly to China? But part of it is not so political. It's just money, like any money in the free economy, looking to make more money. So for that part, I think going back to how strong yuan will act as a currency, and also how difficult the U.S. will make it for Chinese investments.
Do you think the U.S. will make it difficult for Chinese investments?
I think the United States will make it better for itself. I would agree with Peter in terms of the possibilities associated with Trump's tax strategies. Because if there's one certainty today, is that the tax inversion business is dead, right? It is one thing, basically, for Apple to make innovative products, but if the most innovative thing that it makes is its tax strategy, you've got a problem. And it was interesting that when Tim Cook gave evidence to a Senate inquiry 2 years ago, he made it abundantly clear that Apple was not going to bring its cash pile back into the United States until it got an effective tax rate of less than 10%. It wants it in single digits. Now, the congressional Republican tax plan brings it down to 22%. Trump says he'd bring it down to 15. He could do a deal with Cook and say, okay, let's split the difference, 12.5, bring the money back. All of a sudden, that brings real well-paying jobs back into the American economy. I think that is going to be the first battle you're going to see is between Tim Cook and Donald Trump.
I'm trying to imagine that in my mind. I just want to, one more question, and then I really want to open it up to questions from the audience. Alicia, we've been hearing this idea that the American economy could be stronger in the medium term. We bring jobs back to America, projects back to America. Can you see that in your investment economist crystal ball at all?
Okay, so I'm not the tax authority of the US, but if I were, I would start scratching my head and say, okay, you're going to build infrastructure, you're going to lower the tax rates to corporate, so where is the funding coming from? Yeah, where is the money coming from?
Well, the money that hasn't been taxed in Europe because it was effectively...
That's a mind that, I mean, if you think about what Cook can bring to the US, let me tell you, it's not going to pay for all of the infrastructure in the US or for the lower tax ratio that he will be paying. It's just not enough money. So, you know, he has to make a credible plan for a relatively high debt ratio, let me tell you, public debt ratio, to continue to be stable. And for that, by the way, low rates do help. So this brings me back to the fact that, if he has to start making those calculations, I do see low rates for the foreseeable future. Maybe just to clarify, not December, because that would be really, losing face. But the point is that we were expecting 3 more hikes at Natixis next year, strong dollar and so on. I mean, for our scenario, we now have to change it because I don't think that's going to happen. So, but to your question, it all looks very good, but the minute that, analysts like us start looking at the sustainability of US public debt, then I may start wondering whether I should put my money there for that low rate that I'm going to be paid, because that might not actually account for the actual sovereign risk that the US may end up having if these policies actually take place.
So many factors at play. We're only a few hours into digesting this U.S. presidential race. I'd like to open it up to the floor. We have microphones around, so please raise your hand. We'll start back there with Mark. If you'd stand up and also tell us your name and organization.
Yeah, Mark Michaels from My May Asia. Fascinating discussion, and I'm a little hopeful now. Thanks, Peter. I appreciate it. No, but I want to go back to the last point, just ask a question, because I think you're right, and I think maybe even both candidates might have stressed more on the fiscal side than they would have the monetary side anyway. I mean, it's hard to tell. So I think the tax moves make sense, but infrastructure in particular, great big need. But the policy you just outlined and the doubts you just outlined sound a lot like Paul Ryan. And in fact, and leading the U.S. Congress, not just Republicans, Democrats too, they've been very reluctant to move forward on infrastructure projects, basically for the reasons you just outlined. Do you feel that could change? And, can you think of positive ways to push this forward that would also bring along the people that voted for Donald Trump?
Is that to me?
I don't know.
I guess the question is these grand plans that we've been hearing about all along the campaign trail, when it comes to January, when it comes to translating things into reality, will we actually see that? I don't know if anyone has an idea, just judging by what we've seen so far. It's early days. We don't even know who's going to be running Trump's team in full.
I'll start, Mark. I think it's not a question of whether, it has to happen. The infrastructure is at a point between rail, whatever it is, highways. It's at a point where it's a disaster, and it really has to be addressed. So I think it will be addressed. In terms of what I think Trump can do, is he can do something, right off the bat, very similar to what Kennedy did when he got in, which is you put the other party on the cabinet. So I think Kennedy put State Department and Treasury and I think the CIA, right, were Republicans. I think President Obama did something similar, but he's got the House, he's got the Senate, he's going to be rolling. But if he can reach across and put some key people on his cabinet that are from the other party, I think that would be a great first step.
Other questions? Right over here, please.
Hey, Peter Davids from Thomson Reuters. Gloria, if you think about investment into China, the kind of traditional foreign direct investment, Trump has been very, very clear about saying that he's looking for tit for tat in terms of global investment. Is there a possibility this could lead to a more open view on the part of Chinese, the Chinese government? You have the foreign investment law still under active consideration, as far as we know. Could we see an opening up there if Trump takes a hard enough line?
But China has opened up already. So there's a new law that changing the approval requirement for foreign direct investment. So basically, as long as you're not on the negative list for certain industries involving national security, censorship, etc., telecommunication, publishing, Thomson. Wait, I want to keep it a short negative list. Then you only just need to file to form a company in China, even if its foreign direct investment. So they are already making an effort to make it easier. 2 years ago, people talked a lot about the draft foreign direct investment law. I don't know whether it's going to ever come into effect. And even if it does, I'm not sure that it is actually a step forward in terms of opening up the Chinese market further. China is a member of WTO and is, well, by some count, has more than 50 violations right now. And I think either Trump or Clinton said they're going to appoint a prosecutor for trade violations. That might get done. But what kind of judgment are you seeking, really, against China? Can you really force a country like that to abide by their WTO obligations? I'm not sure, right? So now you're putting President-elect Trump or President Trump together with China. You have two big unknowns who cannot really be nudged or forced to cooperate. So I don't really have an answer, Peter.
We have time for 2 more questions. Pete Sweeney, Breaking Views.
Back on? I'll just stand up. This was an interesting thesis for me that obviously this is an opportunity for China to kind of take advantage. We've seen some recent developments in ASEAN, specifically with the Philippines, recently with Malaysia. The question in my mind, is an economic one, which is that, the same situation obtains now as before the election, which is that the reason that, ASEAN and Asia was doing business with the States was because of this enormous consumer market. That whatever you thought of American politics or American people or the American military, you could sell a bunch of stuff to it. Now, what's been interesting in ASEAN has then been this declining demand, or this weak demand from China for like manufactured goods from its trading partners. That what you've had instead of this trickle down in low-end manufacturing has been increased automation in China, so those jobs are not moving out at the same rate. At the same time, China is moving inward and clearly, focused on serving its domestic market. So what we're seeing is a lot of outbound infrastructure investment, and we could get a bunch of trade deals. But absent, a deeper transformation in the Chinese economy towards this consumer society is going to buy a lot of stuff, from its ASEAN neighbors. How much traction do you think China can get diplomatically, absent an internal reform that would change the way it's dealing with its trading partners much differently than it is now? I'll leave that for anybody.
So China's going to make more friends. Will it make more friends in the region, increase its own trade as the U.S. shrinks back or sinks back into its own America first?
Well, if you look at Australia, for example, think of all the major housing markets in the world. At the beginning of the global financial crisis, the 3 most overvalued property markets in the world were the Costa del Sol, Dublin, and Sydney. And Sydney's still going up, right? So why is Sydney still going up? In large measure because it's a massive influx of Chinese money into the housing markets in both Sydney and in Melbourne, raising fears that perhaps this is a bubble, but nonetheless, basically has really kept a quite anemic economy going, right? Now, if there is rising demand in the United States, then basically there is nothing to stop basically Chinese money going in, as long as, of course, the United States is prepared to allow it in, right? And so this becomes a delicate balancing act. It seems to me, going back to the earlier point, it seems to me that looking at Trump's relationship with the Republican Party, it is not necessarily, a love-in, right? I mean, Trump is very much an iconoclast, right? And he is a person with the most acute antennae in terms of the mood of the country. And I don't think we're going to see basically him taking on the socially conservative Republican agenda. I just don't see that happening. The second thing which I think was important and linked to that, and goes back to Pete's point earlier about is this an exercise in venting? Well, maybe. But in actual fact, Trump now has the capacity to fundamentally change the American judiciary by appointing 2 to 3 members of the Supreme Court. And through that process, basically, all of these vacancies, right the way down to the DC court and all the way down into the federal judicial system, The change that we're seeing in the United States at the minute is not a one-term presidency. This is a generational change, and I think we have to come to terms with that.
One more question from the audience. Rob. Right there.
Rob Glucksman. I run an import company into China. We sell specialty chemicals and fertilizers into the PRC. As a now completely reformed Republican.
I notice you're not wearing red tonight.
No, I got interviewed. Sorry, I should have worn a tie. I wasn't thinking about. What about, not to take the bloom off this potentially nice rose here, but what if Trump actually does what he says? I mean, I hate to be terrified. You know, Peter and I had this conversation earlier at the AmCham event, but if Trump does come in and put 15 to 40% tariffs on Chinese goods, which he can do by executive order on January 21st, all of a sudden, you know, those of us who import products into China, China doesn't have a legislative process to worry about. That happens in minutes, okay? Those of us who, you know, as I say, you know, it takes 3 days to clear our products into China, all of a sudden that takes 3 months, okay? You're talking big picture about capital flows and things like that, but I think you've got a very practical issue on the ground you're facing from the reality of what Trump is saying he's going to do. That starts shutting down American factories. They do make significant money from their exports. What is the likelihood, do you think, of God forbid, Trump doing what he says he's going to do?
Do you want to answer your own question? What do you say is the likelihood?
That's good.
I was following the Katie Couric and Matt Bai bit on Yahoo, which I think Bai is a gifted analyzer. I've been following him for several months now, formerly from the New York Times. And they made the comment, you really got to go back to probably Andrew Jackson in 1828 to see something that was this unexpected, this potentially revolutionary. I mean, the man came out of nowhere. You know, short of people in cowboy boots jumping up and down on the sofas in the White House. You know, that's really what we're looking. Nobody has any idea. I'm just curious whether anybody else has anything. You know, if this does happen, I mean, this could happen. You're talking about months, and see what happens. This could happen very, very quickly, and it could be extremely disruptive. It seems to me.
Prepared for that scenario, Peter? That it could happen very, very quickly?
I'm hopeful that that he'll at least come to the realization that he does need to surround himself with good advisors and people who will prevent that kind of thing from happening, including the Senate and the House.
Yeah.
And so it's not, it's not just him. I think our checks and balances, we designed it that way on purpose, right? I hope that calmer heads prevail and that the rhetoric he used to get in, he backs off on that.
Yeah, could I just add?
Yeah, because I can't imagine the other way.
Yeah, I just add to that. If you think back over the course of the 20th century and you think of the medium of communication, how the medium of communication has changed. You know, FDR mastered radio, basically, and he was the voice who was there for the fireside chat every Saturday. Then you go to television with Kennedy in '62, right? Then you go to Obama recognizing that money in politics is not everything because you've got the internet of everything and you could raise money basically that way. What Trump is a master of is social media. And in many ways, his candidacy and the way he organized it meant that he could break all of the ground rules. He didn't need to have basically spend money on advertising because the networks give him free airtime. All he had to be was as outrageous as he possibly can or could be. He recognized from reality TV that one needed to be a villain. So everything was painted in really black and white terms. But the really thing that's interesting about the 3 a.m. tweets, etc., is that ultimately Trump wants to be liked. He's a narcissist. And in many ways, he wants to be successful. And the way he's going to be successful is ultimately to do deals, which therefore justifies his kind of life narrative, right? And if you play that side to Trump, you can play Trump.
Interesting point. I want to sum up very briefly just some of the key takeaways. China could well win out of this. Some hope that we'll see some projects in the United States to improve infrastructure. Curiosity over how that's going to be done. Low rates for some time in the United States. trade deals potentially unraveling, but it will take some time, and question marks over Chinese investment into the United States. Will Chinese want to invest in the United States, and will they be able to? That's just some of the takeaways that I've had. I'd just like to ask each panelist to say yes or no to the final question as we wrap it up. The world will be a very different place in a year's time because of Trump. Yes or no? Peter. All you have to say is yes or no.
Yes.
Gloria.
Yes.
Justin.
Yes.
It already is a different place after Brexit. This is one more. I mean, it's just not going in this direction. It's not like only Trump, I mean, frankly.
Or as
So,
they used to
yes.
say, the past was a different place. They did
Yes, that's
things
right.
differently
That is
then.
the right question. That's right.
All right. Well, today is obviously a very big day to digest the transition that we're about to make. I hope we can come back in a year's time and see what's happened. I'd like to thank our panelists for all their views and questions from the audience.